Chair Powell, with the benefit of hindsight, did last year's rate increases make it harder for the Fed to credibly affirm its 2% symmetric inflation target is not in fact a ceiling? And if so, would it be appropriate to lower rates if core inflation remained persistently closer to 1.5% instead of 2%? And if not, do you worry about any unwelcome tightening in real rates given the recent softness in core inflation?
To your first question, if you go back and think about the middle of last year, inflation was at 2% and appeared to be staying there. And the economy was quite strong, was growing strong. The fiscal changes were hitting the economy in a very positive way. And I think the expectation was that inflation would remain up around 2%. The weak first quarter performance was not expected, of core was not expected, and I don't think is related to anything we did in terms of raising rates. It appears to be more, we don't know this, but you never know until only with hindsight, with perfect hindsight, but some of it does appear to be transient or idiosyncratic. Now, the second part of your question, sorry.
Well, if it was an issue, would it be appropriate to lower rates if core inflation held closer to 1.5%? And if not, are you worried that there's unwanted tightening from real rates being where they are?
Yeah, I mean, so as I said earlier, we do address this in our sort of constitutional document. If inflation were to run persistently below 2% or persistently above 2%, that would be a concern for the committee, and the committee would take that into account in making policy. I do think it's important that inflation run close to and sustainably for a sustained period of time and symmetrically around 2%, because if it doesn't, you run the risk that inflation expectations can, if it has been the case, most of the misses are on the downside. Inflation expectations over time could be pulled down, and that could put downward pressure on inflation and make it harder for us to react to downturns and harder for us to support the economy in difficult times.